Hi, good morning, everybody, or afternoon, or evening, depending on where you are in the world. I know it's morning for me. Julian, my colleague and our Chief Revenue Officer at UnaTerra, is based in the UK, so evening for him. But hopefully you fall somewhere in between there, and it's not 3 in the morning or something like that for you. Thanks for jumping on. We're really excited to bring this information to you today. This is our first webinar of our 2021 program, talking about solving the mysteries of international HR, hiring internationally, kind of a bunch of different facets of doing business in other countries. Like I said, my name is Andrew Laing. I'm a business manager here with UnaTerra, and we've got our Chief Revenue Officer, Julian, on as well. I'll give you a little bit of background about UnaTerra before we get started. We help our clients expand into over 90 countries around the world by providing advice on expansion, and then registration support, post-registration support, including HR, payroll, accounting, compliance, really everything that you need taken care of, so that you can focus on your business and your people, and not worry about compliance and all that sort of things. So today we're going to go over international hiring, the basic solutions that are available, when those solutions are applicable, a little bit of the reasoning behind why these solutions are in place, and then we'll go ahead and answer any questions you have at the end. So like I said, we'll go over why companies hire internationally, the drivers behind the expansion, how governments respond, and then what solutions there are in place in a lot of other countries, so that you can hire folks there. Obviously, like I said, we do business in 90 plus countries. There's a ton of countries around the world. There's going to be differences in how hiring works between all of those. If you have any questions, feel free to put them in the chat. We'll respond to those at the Q&A at the end. We'll also go over some of the basic costs for hiring abroad. Again, that varies country to country, but that's going to be something that we can certainly help out with and give you a general idea of. One thing that we'll be doing is sharing some polls throughout the presentation. So I'm going to put the first one up now about which of these best describes your company's international presence. So feel free to go ahead and respond there. This is going to feed into our next slide here about why companies expand abroad. So a lot of companies, the driver is either access to a new market, so selling into a new market, or you've got a customer there that needs support. And then the other kind of side of the coin that we see is access to talent. So a lot of countries have highly skilled talent at less rates than somewhere like the US or the UK. A lot of companies are finding that that's a good reason to expand abroad, especially now with remote work being a much bigger thing. Governments often offer tax incentives as well, and other different types of incentives to attract foreign businesses. A big example of this would be like an R&D tax credit. You can get a lot of your R&D expenses refunded at the end of the year when you're filing taxes. Really depends on what a company's workforce skills are and what they're trying to attract. But that's something that we could help you understand as you look at designing your international strategy. Some key considerations when you are building a global workforce and expanding abroad: cost. So not only just it's cheaper to hire somebody in another country, but you have to look at the cost of remaining compliant there, so establishing a solution that works. And then, thinking about salaries and such as well. Culture, it can be difficult to maintain a cohesive corporate culture across a lot of different countries in a global workforce. But that's something that, we have experience with. Me being based in California, we've got folks on the East Coast, and then in the UK and some scattered around the world as well. And then, like I mentioned, compliance. So remaining in compliance is a big one. We're going to go over some of the solutions that can help keep you in compliance, and some that you may think keep you in compliance, but don't really. But kind of one of the key things to consider when expanding abroad is permanent establishment risk. And that's kind of the driver behind a lot of compliance and the backbone of a lot of these solutions. So I'll go ahead and pass it over to Julian to explain PE risk.
Thanks, Andrew. Apologies and hi everybody. Thanks for joining the webinar today. Thanks, Andrew, for the introduction. Interesting, just looking at the poll results, relatively even split between each of the categories, with the biggest return being people looking to expand internationally. So we obviously have some attendees who are here to understand, hopefully, a little bit more about what it means and what to consider when expanding internationally, hiring people internationally. And this concept of permanent establishment risk is really is fundamental to a lot of the work that we do. So at UnaTerra, we work with a lot of companies with their existing international operations, but also to create new international operations, hiring people in new countries. One of the first things we really want to understand and inform, to help inform what the solution will be, is whether the planned activity is going to create a permanent establishment. And so it's always important to consider this. And so I thought we'll do a couple of minutes on permanent establishment, what it means, and what sorts of activities and under what sorts of circumstances is permanent establishment triggered. So some of you may or may not have heard of this issue of permanent establishment. It's a very tax risk focused concept. If you're in HR, for example, you may or may not have come across it before. If you work in a tax department or a finance department, you may be more likely to have done. A permanent establishment, so this is talking about your business's activities in a new country or another country. A permanent establishment is a fixed place of business which gives rise to a certain type of tax liability in that country. And it can be VAT or some sort of sales tax type of exposure. But the one that we advise on a lot and that our clients often need to consider is corporate income or corporation tax, and whether the activity that your company is planning or undertaking in a new country creates a nexus for income tax or corporation tax. So there are different solutions out there depending on what your plan is for a new country. And in terms of informing your decision about that solution, what we do is we look at what's planned and assess the permanent establishment risk. So how likely is it that your activity in that country is going to inadvertently trigger a risk to the local corporate tax landscape and environment? And so in making that determination, what do we look at, and what are the key triggers for permanent establishment risk? What are the key activities that are going to trip that corporate tax exposure nexus in the country? And it typically falls into two main categories in terms of hiring people. One of them is are they engaging in commercial activity? So in our parlance, that really means, are they engaging in activity which directly generates revenue? So that's typically sales activity. The more senior a salesperson, the greater the risk of triggering permanent establishment. And what that means is, if you have an individual selling in a country and generating revenue, then that activity is a trigger for the local tax authorities to say there's commercial activity going on, there is on-the-ground activity which is generating sales and profits. And as the local tax authorities, we would like to have some element of tax earned off of the profit that's generated by that local activity. If that selling activity was done from outside of that country into that country, that doesn't create the same tax situation as actually having somebody on the ground selling. So there's this concept that commercial activity is a very strong trigger for permanent establishment, and therefore exposes the company to corporate tax in that country. Another one, which doesn't directly fall into revenue generation, but senior management or executive level management who is based or located in a country, automatically creates a permanent establishment. Senior decision makers who are involved in the management decisions of a business, they're not directly generating revenue, but of course in in making those high-level decisions and steering the business, they are, almost at a higher level, creating value. And in a sense, they're responsible for generating revenue in all markets because they're involved in steering the whole business and the strategy of the business. So senior managers, as an executive level people, all founders, for example, should always be accommodated. They will always create permanent establishment, and we'll talk further in a few slides' time as to what's the difference in the solution if a permanent establishment is or isn't created by certain activity. And the last one is a fixed place of business. So in having an office, in having a sign outside your office that says your business is active in a country, it's very difficult to argue that that isn't a permanent establishment, because that literally, it's an establishment. It doesn't need to, belong in a bricks and mortar sense to your business, but even working out of a WeWork or similar space can also create that fixed place of business, which triggers permanent establishment. So the key thing to understand on this issue of permanent establishment is, what sort of activity are you planning to engage in a particular country, and what is the impact in terms of planning the most appropriate solution in terms of trying to hire and onboard new employees and individuals in that country. So that's permanent establishment risk. Andrew, I think we can move on from that slide.
For going over that. So when you're looking to employ someone in another country, there's a lot of different options available. I'm sure you've heard of a few of these, at least contractors and direct employment, but wanted to go over these at a high level before we kind of do a deep dive into them. So starting at the top of this pyramid here, a lot of folks hire people internationally as contractors. So that's, does not create an employment relationship. They're doing a specific function for your business. It's important to assess whether an employment relationship does exist between your company and a contractor on a regular basis, just to ensure compliance. Because for contractors, they're receiving payments that aren't through a payroll setup. They're responsible for remitting taxes on their own. That could create some liability for your company if the government determines that there is an employer-employee relationship there. Moving down, another one you might have heard is employer of record. So this is also called international PEO or EOR. This differs from PEO domestically here in the United States, where co-employment is the thing. So co-employment is sharing the legal employer responsibilities between two companies. Internationally, how this works is that the international PEO or EOR firm will hire the employee. They'll have the legal responsibility. They take care of payroll, benefits, payroll compliance, and then they'll lease that employee out to your company, typically for a percentage of their compensation. So that's a good way of entering into a market in a more compliant sense. Still kind of exists in a gray area with regards to permanent establishment risk. That can become an issue where sales folks are involved. Putting sales folks on an employer of record arrangement is not recommended, since like Julian mentioned, that kind of triggers a permanent establishment risk, but is a good way of entering a country quickly and relatively compliantly. At the bottom here, this is the least flexible, but also the least amount of risk, is direct employment. So this is the most compliant solution. This involves making some kind of registration in a country. Julian will go over those in a few slides, but whether that be creating a legal entity or registering another legal entity to provide payroll in a country, those are both compliant solutions in different locations. This carries with it the most kind of administrative burden, more cost, but is definitely going to keep you in compliance wherever you go. So again, moving from top to bottom, the top is the most flexible. Contractors, it's very easy to terminate that relationship or bring someone on as a contractor, but you're also most at risk for permanent establishment noncompliance or tax noncompliance. And then the bottom there, direct employment, least flexible. It takes a lot of time to set up an entity or make a registration in a country, but also the least risk. You're not going to worry about tax compliance or anything like that. That's all going to be covered by whoever you get to help you. So I think with this, I wanted to introduce a second poll and ask whether people are using international contractors right now, or whether that's something that companies are thinking of doing. So go ahead and I shared the poll there. If you feel like answering that and using, if you use contractors internationally, that would be helpful information for us to kind of guide the presentation. And we'll go over some of the solutions more in depth. Julian, I'll let you take that away.
And again, it's interesting looking at the poll results coming in that it seems like everybody who has given an answer is using international contractors in some way, shape or form. And in fact, the majority are confessing to having contractors who may actually be employees. So it's an interesting starting point. That was the point of the poll there, really, was to have a look at how people are using contractors and how aware I think our audience is that in a lot of situations, contractors are used domestically and internationally in situations where really it's a substitute for an employment relationship, and there's all sorts of dangers and issues there. Just looking at when international contracting is, we'll look at it's got 4 options, and the first one is independent contracting. We're just going to look at the pros and cons of each option, and then a quick high-level view that I'll give as to what the main risks are, if any. International contractors is an interesting area. The advantages I think most people will be aware of, particularly those who have said that they use international contractors who may be employees. Quick to hire is an understatement. It's immediate. You can hire international contractors immediately. They're easy to administer in that effectively there is no administration to engage in. Super straightforward. They invoice, you pay the invoice. No administration effort, no administration cost. By no administration cost, what they invoice is what you pay, and there's nothing layered on top. It's really straightforward. The disadvantages and the concept of limited application I'll expand upon in a moment, but obviously not every situation is appropriate for international or for general concept of independent contracting. There's a high potential for liability, general sort of concept of risk attaching to this type of arrangement, and it does also create permanent establishment risk. When it comes to talking about the risk associated with independent contractors, particularly those who really are employees, it's a question of really where do you start. And one of the highest risks that you run with longer term independent contracting is that, particularly in Europe, but in a lot of other countries, a lot of other parts of the world, if a situation in a legal substance over form, in a substance over form review of a situation where somebody is an independent contractor, if a determination is made that that individual is actually an employee, and this is a determination that the employee can make, but it can also certainly be a determination made by tax authorities or in court, which is the most unfortunate situation. You can end up with a situation where a contractor is actually considered to be a de facto employee, and therefore they enjoy the benefits of employment law. So even though they're not an employee, the law courts or the tax authorities can interpret that individual is in fact an employee on a substance over form basis, and therefore they enjoy the protection of employment law in that country. However, as an employer, without an employment contract, you certainly don't enjoy any of the protection that you may otherwise get from employment law. So you can end up with contractors who have the full protection of employment law, but you as an employer have none. This can crystallize in a number of pretty nasty ways. One of them is that if you terminate a contractor, a long-term contractor, and they're not happy about it, they can bring about an employment-related case against the company, which obviously can be untidy at best, and the outcome, can obviously go either way, and it can often depend on which country you're talking about as to which way it does go. Another one is it's a very hidden risk, this one, but with the best of intentions, when it comes to converting contractors to be employees, and often the case that after a period of time, and it could be a sensible period of time like 3 months, or it could be, we work with companies who are trying to convert contractors who have been full-time engaged to the company for 2-3+ years. They, with the best will in the world, they then seek to convert those contractors to be employees. It's more compliant and it looks better. And get into a situation where if you're not able to convert them to terms that the contractor themselves are happy with, you can end up in a constructive dismissal situation, because they do have the protection of a local employment law. You as a company, frankly, don't have a leg to stand on. And if you're not able to convert them to be, I've worked with companies who have ended up just leaving people on as long-term independent contractors, because they consider that the risk that has accumulated over time is so great that they then risk crystallizing it. And so rather than head the risk off and try to mitigate ongoing risk, they actually end up running a much greater risk by essentially putting up with the status quo. Long-term independent contracting is fraught with risks, and I would urge everybody to always at least go some way to following the rule book, in terms of, if the arrangement looks like an independent contracting arrangement, if it feels and smells like an independent contracting arrangement, then by all means engage people as contractors. But if it's intended to be a long-term open-ended arrangement, if you're just trying to harness talent in as low cost a way as possible, it can very often backfire, and the low cost, what appears to be a low cost initially, can sometimes unravel in the longer term. And it has to be said that one of the situations which is most sensitive to this is due diligence. So it often doesn't necessarily unravel as a result of some legal case or as a result of local tax authorities looking at the situation. But if a company goes into due diligence and a whole raft of independent contractors, whether they be in your home country or abroad, are disclosed as part of due diligence, then that can have an impact on valuation or appetite to invest. And so that is probably actually the situation when the risks are most likely to crystallize. So that was a high-level look at hiring international contractors. We're now going to look at I think we're going to graduate into more compliant territory. What are the options for hiring people if you want to do it in a compliant way to some degree, and most notably in compliance with HR law? So there's another poll gone up there. Andrew's just popped up the poll. Does your company currently use PEO or employer of record services for international employees? So Andrew, you've already changed the slide, my apologies. So just looking at that, it looks like there's a mix in answers. Some do, some don't. Quick look at the advantages and disadvantages, and I think those that use PEO or employer of record for international employees will no doubt understand the advantages. It's, in terms of time and effort for your business, it's very quick, and it doesn't cost much at the outset. There isn't much upfront investment. So what it enables you to do is hire somebody in another country very quickly, very easily, and in terms of upfront cost, there is very little. So if you identify somebody that you want to hire quickly in almost any country in the world, then this is actually a solution which works well. What it does give you is total compliance in terms of local employment law. So what you can do is you can use PEO or employer of record services as a way of making sure that you're engaging the employee locally in full compliance with employment law. They'll always get statutory benefits, so you don't have to worry about them not getting coverage of whether it be Social Security or various employment-related insurances. But that's the advantage. In terms of disadvantages, it's still very much a grey area in terms of compliance. We've got a compliance slide coming up in a little bit, which explains of these different options that we're presenting, to what extent are they compliant or not. So employer of record or PEO, very much a grey area on the international scene. As Andrew said, it's very different from the domestic PEO offering that's available in the US. In terms of benefits that you want to offer your employees, tends to be limited in terms of what you're able to offer and extend. So if your mindset is very much that you want to replicate all the benefits that are available at HQ, sometimes that can be a bit difficult. But something we come up against a lot is corporate culture issues. So the whole concept of employer of record is you're essentially engaging with a third party to employ your local hire. Some employees don't mind, and some companies don't mind, but there's a bit of a disconnect from a cultural perspective. But some are very sensitive to the fact that actually it's very difficult to truly embrace a new hire and tell them that you're fully extending your corporate culture to them if actually, on day one they're engaged to a totally unconnected party. And as I say, enthusiasm for the model varies from candidate to candidate. Just because your first hire in a country is okay to be engaged through employer of record, the next one might absolutely refuse. And we see plenty of situations where candidates are lost because prospective employers want to engage them through employer of record. It does also get expensive quickly, so there are no real economies of scale. If you want to hire one person, it will cost you X. If you want to hire 2 or 3 people, it will cost you 2X or 3X. So you don't really get any sort of economies from increased headcount. Stock options is also a risk in a couple of ways. One of them is that actually, if you're extending stock options to your employees, but they're under an employer of record model, there is a compliance issue there because technically they are options that are extended through their employment. But if they are actually employed by a third party, which isn't in any way connected to your business, it's almost impossible to achieve compliance from a stock options perspective. The second risk is that the PEO fee model is generally built on the basis of a percentage of your employees' compensation, subject to a de minimis, but broadly speaking, it works as a percentage of your employees' comp. If something happens and your employee exercises some stock options, so it might be that your company goes through an IPO, or it might, for whatever reason, if they exercise stock options, in a lot of countries, in a lot of situations, the gross value of the stock option exercise goes through payroll, and as a payroll item, that counts as comp, and the percentage that the PEO company applies will also apply to the stock option exercise. So an employee might be on 10,000 euros a month as a salary, and your PEO fee might be 1,000, but if suddenly they exercise some stock options and their payroll for that month spikes to 100,000 or more, then your PEO fee will ramp accordingly and go from 1,000 to 10,000. That's broadly how it works. So there's a risk there from a purely sort of cost perspective. I think that's everything on international. What we would say is, just one last point on employer of record. At UnaTerra, we don't offer employer of record or PEO services. We do make that clear. But what we do recognise, having painted the advantages and disadvantages, one thing that we absolutely recognise is it's a very, very good solution for certain situations. And so although we don't offer the service directly, we do fold it into our solutioning. And if a client comes to us and says, I want to hire one person in the UK and I want to hire one person in Brazil. We've got some great solutions which are very cost effective for hiring the one person in the UK. We don't for Brazil, because Brazil is a very complex place from the point of view of employing even one person. You need to set up a full legal entity. It takes months. It's very expensive. In that situation, we would happily solution the UK employee, but we recognise that PEO, employer record, is absolutely the best solution for the one person in Brazil. So in a horses for courses sense, it is a great solution in some situations, and we absolutely recognise that. Moving on now to direct employment. So we've got two, very quickly, I'll cover two options, which are if you as a business want to engage employees directly and have them contracted directly to your business. And let's face it, most do. Most companies want employees to belong and have a feeling of belonging, to be employed directly, so that, you know, from a cultural perspective and frankly from an expectations perspective, I mean, who expects to start a new job and not to be employed directly by the business that they think is contracting them? So we have two options. One of them is direct employment. We call it direct, well, we're referring to it as direct employment with no legal entity. And what this means is, and actually, you know, in a fair number of situations, we talk to clients and prospects, and they're not aware that this is an option. And the option is that in some countries, you can employ somebody locally without the need to set up a legal entity. A lot of our prospects and clients have this general assumption that in order to employ somebody in a country, you absolutely have to have a legal entity in that country. And actually, that's far from the truth. Lots of countries, it's possible to employ somebody locally without having a local legal entity. What it means is that we have to take a non-resident or let's take France, for example. If you want to hire one person in France, we need to take a non-French legal entity. So it could be a UK legal entity, could be an American legal entity, and we need to register that legal entity as an employer in France, so that we create the necessary registrations, the necessary tax profile with the tax authorities, that we can set up a payroll, because in this situation, it absolutely must be a French payroll. We can create a French employment contract, because in this situation, it's absolutely the case that this is governed by French employment law. But the employment contract can be between the French employee and the UK or the US legal entity. So the advantage is we don't need to set up a legal entity. We just need to make some registrations. All we need to do is run a payroll. There's no accounting requirements. Compliance requirements are very limited. And so it's a really nice light touch solution for hiring in certain countries. So no legal entity. You know, in terms of the advantages, I've already talked about some of them. It gives you as a business full compliance with HR, so with employment law locally. We have an employment contract which makes sure that the situation is fully compliant and ticks all the employment law boxes. You do get that direct relationship with the employees, so they know that they're contracted to your business. They really feel that sense of connection. It's compliant from a benefits and stock options point of view, as long as you do it right, of course. You know, you need to have the right support and the right advice, and this is an area that we do a lot of work in, advising our clients how to, and what in fact we execute on behalf of our clients, but we put this solution forward in many cases as the best one from a cost risk benefit perspective. So from benefits and stock options perspective, can be fully compliant. It's quick and it's low cost relative to the option which involves a legal entity. In terms of disadvantages, is not available in all countries. There are those that do and those that don't allow this type of arrangement, and it doesn't mitigate PE risk. Generally, it's a permanent establishment risk. Generally, the idea behind being able to employ people locally without a legal entity, the idea behind it is that your business gets a chance to hire somebody who can investigate and consider the local market in a phase, a sort of pre-commercial phase. So in order to examine whether the French market is interesting to your business, you don't want to have to set up a legal entity. And in fact, you don't. You can make this simpler registration without a local legal entity. That technically allows you to do non-commercial, so non-selling activity. And in some situations, that's fine. You might want to have, might just be hiring a software engineer or a customer support individual. What we find is that a lot of our clients do like to take something of a risk and have particularly lower level salespeople on this type of arrangement. Again, otherwise you end up with a legal entity for every country where you have low level sales representation. So there is the ability to play in the margins with this particular solution. But in terms of suitability, it's ideal for lower headcount, so less than 5. It's better for non-commercial activity, but we do support plenty of these types of registrations with, as I say, lower level sales and business development people. And it's really just a question of understanding and accepting that there is a low risk of a low permanent establishment risk, effectively. So that's the good news is that you can hire people in a lot of countries, where particularly in Europe, you don't need to go to the lengths of setting up a legal entity. You can go with this lighter touch solution. It's quick to set up, it's quick to close down, and it's relatively inexpensive. So that's the direct employment without a legal entity. And the final one, which really, in terms of being as good a corporate citizen as you can be and giving your business the best opportunity to be fully compliant with everything, then direct employment through a legal entity is the kind of all singing, all dancing solution. And it's a natural solution if you're setting up a big operation. So if you're hiring teams of 5 or more, if you have very senior people in a country, could be, if you have a European VP of frankly anything, that level of person should be accommodated in a legal entity. And it's not unusual to find particularly US businesses setting up a legal entity in one country in Europe and conducting the majority of their bigger ticket sales through that legal entity, perhaps through a network of lower level salespeople who are employed in other countries without legal entities. So it's a bigger ticket solution, but it's a bigger commitment to a country. But in many situations, it's inevitable. The advantage is you still get to be fully compliant with HR law, but you also get to be fully compliant from a corporate tax law perspective. So a legal entity is what gives you full protection from. In creating a legal entity, you are actually creating a permanent establishment, but in fulfilling all your obligations from a tax perspective, you can keep the company fully compliant, and you can take ownership of that permanent establishment situation rather than allowing the tax authorities to do so. And you can only do that with a legal entity that has corporate tax registrations. So it gives you the ability to be fully compliant from a corporate tax law point of view, still gives you the ability to have those direct relationships with your employees. Excuse me. Work visas, if you're wanting to transfer employees between countries and they need visas, it's almost impossible to do that without a legal entity. So if your first port of call is, hey, we want to hire somebody in Australia, and then we're going to transfer somebody over from HQ who's going to go and join that person and set up the Australian part of the business. If that individual who's transferring needs a visa, then it's impossible to avoid the need for a legal entity in order to really to put yourself in a qualified position. Legal entities also give you the option to take advantage of tax incentives. So if you're trying to take advantage of the UK or the Australian or the Canadian, for example, R&D tax incentives, those 3 countries all have very strong R&D tax related incentives. It's difficult to enjoy corporate tax related incentives without corporate tax registration. So a legal entity is really sort of mandatory if you're hoping to tap into those. In terms of disadvantages, from a risk perspective, there aren't any. A legal entity gives you the ability to control all the risks. What are the disadvantages then? Admin, there's an admin burden. A legal entity needs account, not just payroll, it needs accounting. It needs to be VAT registered or GST registered, and then all of the compliance obligations need to be fulfilled That's all work that we at UnaTerra do. So we do sort of have a full package of services which delivers on all of that. But a necessary part of that is higher upfront costs. So a legal entity with greater accounting and tax obligations will inevitably result in higher costs. But an inevitable part of doing business and setting up a more substantial operation. Last one on these different options. I said that we would look at compliance in terms of what type of compliance does each of these options give you and deny you. So the ones to look at are, does the option that we're looking at give you compliance with employment law? Does it enable you to give competitive benefits? Does it help you overcome permanent establishment risk? Does it give you what you need to sponsor visas? And does it enable you to compliantly extend stock options? So independent contractor, it's the easiest one to set up, but it doesn't give you any of the above. You obviously can't be compliant with employment law if you're a contractor. From a benefits perspective, it's a real no-no to offer any sort of benefits to independent contractors, even PTO. So I often advise clients and prospects that it's a real mistake to offer contractors flat monthly amounts, regardless of whether they take paid time off or not, because PTO is one of the big bargaining chips you have when you're trying to convert contractors to employees, and it can be worth 10 or more % of salary if they're moving to a situation where they enjoy PTO. And if they already have that as an independent contractor, you're not offering them anything extra. So independent contracting, super easy, somewhat risky, and super not compliant, unfortunately. PEO, employer of record, it does give, and the key thing it does give you is it gives you compliance with employment law. So from an employment perspective, you're going to be compliant. Your employee will get what they need, and they won't fall short on benefits or any of the locally mandated things they need to have. Difficult to offer competitive benefits. Contrary to some opinion by some, if you employ somebody through PEO and they are a card-carrying salesperson for your business, that still creates a permanent establishment risk. You don't get any protection from that. In some situations, a PEO company or it will support visa sponsorship. Quite difficult to do though. And again, that sort of grey area of stock options and PEO means that I can't give a green tick to stock option compliance through the employer of record model. That just leaves direct employment, and either through a legal entity or not. So non-resident employer was our employing without a legal entity. That gives you full compliance with employment law. As an employer, it means you can offer whatever benefits you like, anything, literally anything, medical cover, and I've seen it all, puppies from the local dog shelter. I've seen all sorts of unusual benefits offered. Whether you have a legal entity or not doesn't impact your ability to offer that at all. But it doesn't give you protection from permanent establishment risk, and it doesn't give you the ability to apply for sponsors, so visas. So you can't have employees switching between countries and moving to a country where there is no legal entity if they don't have the right to work there. But it does give you compliance from a stock option perspective. And finally, employing through a legal entity gets a tick in every box, because the whole point of employing through a legal entity is it gives you a vehicle through which you can be compliant from all perspectives, literally all perspectives. Employment law, corporate tax law, it allows you to go for visa sponsorships. You're compliant from a stock options perspective, literally. It gives you and you have to do it right. Obviously, just because you've got a legal entity, it doesn't make you compliant, but it means you can be compliant. That's the key thing. I think that's it on that slide, Andrew. I think we've got possibly just one more.
Yeah, so I wanted to talk about a little bit about the costs and really at a high level things to think about when you're budgeting for international hires and international expansion. So above and beyond kind of the solutions that Julian mentioned and the costs of implementing those, Some things that you might want to consider are payroll taxes. So some countries are significantly higher than others. Somewhere like France is about 45% the cost loading, and that includes social costs as well. But that's generally percentage of an employee's compensation, what it costs to employ them there. Germany 20 to 25%, whereas somewhere like Lithuania is closer to 2%. So it's good to get kind of a sense of that before making your hires in those countries. Social costs, different from the U.S. Folks joining from the U.K., this is probably more familiar with you, but so the government-mandated pension, government-mandated healthcare exists in a lot of other places in the world, so can make it significantly more expensive than somewhere like the U.S., where you're paying for that through private insurance companies and can kind of manage those costs a little better. Additional benefits, these are things like healthcare vouchers, childcare vouchers, meal vouchers, car allowances, things like that. There are a lot of places where there is government mandated healthcare. There are supplementary health insurance plans. Those can help you kind of be a top tier employer and attract better talent in those countries. So that's something you want to have a discussion with provider like UnaTerra or whoever you're working with to chat about what you want to scope in and what the costs of those might be. Potential for litigation is one where some countries like France and the UK, employment law heavily favors the employee. So it's a good thing to think about. It doesn't necessarily mean that your company is going to get into litigation, but somewhere like France, where it's really difficult to terminate someone, it's not at-will employment like it is in the U.S. There's a high possibility for litigation and employees complaining about the dismissal or unfair dismissal, so that can lead to legal fees there. So this is, again, really high-level view on how to budget for international hires and international expansion. If you want a better idea, I'll put my contact information at the end of the presentation. Definitely feel free to get in touch. Highly dependent on which solution you're going with, what country you're entering, how many employees you have, all that good stuff. But we can help walk you through that. So I think that brings us to the Q&A. I know we have a couple of questions that came through in the chat. If there's anything during the presentation, feel free to put that in the chat now. Really quick, I wanted to mention that this is the first in a whole webinar series we're doing this year. After this presentation, you'll be kicked out to a registration page. So we're doing these once every 3 weeks. But feel free to register for future ones. We'd love to see you. Appreciate everyone sticking through this long and sticking with us. So Julian, I think if we can pick your brain, a few questions from the chat here. Does direct employment allow companies to hire quickly? And I think this came up during the slide on the without an entity, registration without an entity. Is there a timeline restraint to going in that direction?
Yeah, it's a good question. Excuse me, and it does vary from country to country. Usually, if I had to typify, I would say that it's about 4 weeks start to finish. So it does depend on your definition of quickly. And in some countries, it's a little bit longer. Some countries it's shorter. In some countries, it's very easy to improvise. So if you wanted to hire somebody in the UK today, then we've got the rest of the month to work out how the payroll is going to work. At the end of the month, we can make the registrations, we can get everything in place. Those activities can run in parallel. So country like the UK, where it's all super straightforward, it's really how quickly do you want to push the button and how quickly can we get the employee to sign an employment contract. In other countries, it's a little bit more complex. So countries like Spain and Italy, where not only we can't do the registrations in parallel with having the employees start, because there are rules around, there are requirements around employment contracts being registered with the Social Security on or before the employee's start date. So you can't do there what you can do in the UK, which is have them start today and we'll take care of the admin tomorrow. In these countries, everything has to be done in exactly the right order. Otherwise, as an employer, you lose some of your rights as an employer and some of the benefits of having a fully compliant employment contract. But the rule of thumb for us, I would say, is 4 weeks from start to finish, which is okay, because it's quite unusual to find employees who have notice periods of less than that. I know in the US that's not the case, but outside of the US it's typically it's typically 1 month plus in terms of notice period.
And I think a corollary to that one would be, does a small team mean no more than 10 people for each location? I think this is also related to international EOR or payroll registration without a legal entity. We usually recommend, 5 or 6 people be kind of the top. I'm sure PEO or EOR firms would tell you you could do 200 or 300 without any issue. But yeah, I think, Julian, unless you have any further advice, I would say around 5 or 6, no more than 10 for sure.
Yeah, I would agree. So a rule of thumb really is, if you're going into a new country and you're expecting to have 5+ employees, I would recommend going the legal entity option. If you have less than that and you're not expecting to have more than 5 for the foreseeable future, if it's a country where you are able to hire without a legal entity, and there are plenty of countries where you do have to have a legal entity even just to hire one person, then we can go with that lighter touch solution. So I would tend to think of 5 as the cutoff, but again, we can advise on the risks, and if you as an employer are comfortable with them, then it's certainly technically possible to have more than 5 people on a non-resident employer registration. It's just that the higher the headcount, and particularly the more they earn, as the headcount grows and the salaries grow, they're both red flags to the tax authorities in terms of detecting where commercial activity might be happening.
Great. Got a specific question coming in here that, we've gotten a couple related to COVID, but I think this one kind of drives at the heart of it for a lot of people. So for some people that are relocating, so for instance, in the EU, a lot of people have gone home. This question is specifically related to someone moving from the UK back to Italy. They intend to come back to the UK, when things return to normal later this year. They're working as a contractor in Italy right now. Is there a risk of the Italian government saying, that an employment relationship exists, you need to employ this person compliantly? Or can they keep them as a contractor for right now, just since governments might be a little more lenient on those rules due to COVID?
Yeah, it's an interesting one, because we deal with a steady flow of COVID-related relocations, whether it's lock, stock, and barrel relocation, or hey, I went back to my home country and have never been able to leave again, which happens quite a lot too. I think the answer is I don't think tax authorities are going to be more lenient. I don't think they would have an appetite to allow an individual not to pay tax, or to pay tax in the wrong country. However, whilst I don't think they're going to be any more lenient, I certainly think they'll be distracted. And I would say that this sort of determination is probably very low on the priority list for a lot of countries' tax authorities who have got much bigger fish to fry. So I would say this sort of risk, particularly if it's likely that this person is going to come back to the UK, and that there is a plan to employ them formally, I think it's probably relatively low risk. There's a risk there, no doubt, but it's not open-ended. There is a plan to bring this person back. The risk, I suppose, lies in what happens if you get to September of this year and that there's a decision taken that actually that person is working perfectly well in Italy, and they want to stay there. Why don't we just let them stay there? That's when you get into a difficult situation, because the intention at the outset was that that person would come back to the UK. And I've seen this. We have clients who, this person went back to their country. At the time, they were only going to be there for a short period of time. So we left them on the UK payroll. Now, 12 months later, we're in a horribly non-compliant situation. but at what point do you kind of raise the flag and say we've done it wrong? So I think that's one to keep tabs on, but I would suggest that that's not a high risk situation, put it that way.
In that one,
I just see a question there. Can you provide a list of countries where you can hire directly without an entity? We can provide that as a follow-up, but just as a rule of thumb, I can give a quick rule of thumb, which is you can do it in any European country, except Ukraine, if there are, or Slovakia, actually, strange, but those two, Ukraine, but I don't, that's sort of coming out of the old Soviet Union. Basically, all across Europe, you can do it. You can do it in Canada. You can't really do it in any other country in the Americas, so you can't do it in the US. You can't really do it in any South American countries. All of Europe is fine. Australia, you can do it. And beyond those countries, it then boils down to the very specifics of what activity is being undertaken. You can do it in Hong Kong. Technically, you can do it in countries like Singapore and India and Thailand. There's a lot of Asian countries where there is a technical ability to do it, but the activity that you conduct through that sort of arrangement is monitored and is very limited. And again, it's non-commercial. So in the same way that you shouldn't hire a salesperson in the UK without a legal entity, but you can, and lots of people do, wouldn't get away with that in a country like Singapore, and you couldn't do it in India. So it's kind of easier to it's easy to think of it like that. You certainly can't do it in China, big market there. You can't do it in Russia. You generally can't do it in African countries, and you generally can't do it in the Middle East. So I would think of it as Europe, Canada, Australia, and a few others by exception. Looks like Diana asked the question, if you have a specific country in mind or countries in mind, feel free to drop us a line with them, and I'd be happy to answer to the specifics of the countries.
Yeah, and just to add on to that too, I've seen folks in Asia particularly where they go under these kind of non-legal entity arrangements or liaison office, something like that. It is limited in some of the benefits you can offer to employees too, so it becomes more difficult to get health insurance and things like that without a legal entity. So just another thing to think about. Well, I know we're pushing up against an hour here. I think we had originally budgeted for half an hour, but tons of good information. Now you can see why I'm constantly hounding Julian because he's a wealth of all that information. But if you're interested in our future webinars, so like I said, we'll have more coming this year. I think we've got 6 total. This is the first one. We'll go over HR considerations, international compliance, the unknown unknowns. So, a lot of HR folks or finance folks are told, hey, we're expanding into China or Japan or France or Italy or wherever, figure it out. And that can be a lot of research and groundwork, and then you still don't feel like you have everything covered. That's what we're here for. So feel free to start a conversation with us or join the webinar. We'd love to have you and see you on future ones. If you do want to get in touch, my email, phone number on the screen there. General inquiries, if you're based in the UK and don't feel like staying up till 9 or 10 at night just to chat with me, then we've got the general info there. But we really appreciate everyone joining, and hopefully this was helpful, and look forward to seeing you on future webinars. Thanks a lot, Julian, for all the information.
And thanks everyone for joining. Thanks, Andrew. Thanks, everybody.
All right, thanks.